Hey, what's going on, everyone? It's Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Wednesday, January 17th, 2024, and this is how we traded SPY today. So, if we go back to yesterday or the other days, we always start out in pre-market. So, in pre-market, what we're looking for is we're looking for pre-market low at about 471.74, right down in here. And we're also looking for pre-market high, so 474.78 up here. Now, this green line up here represents a gap. So this is where we closed yesterday, so 474.95. And you know what? I kind of had a bias early in the morning. You know, we take out that morning low, bounce around a little bit, and then we're going to go get that that gap from yesterday. It didn't happen, but at any rate, again, had a little bit of a bias, but that's okay. That's okay. So we got into the trading day this morning, and here is what happened. So again, we are looking for fresh crosses. We're looking for fresh crosses to the upside, fresh crosses to the downside. And just like other days, guess what? We did not get a fresh cross immediately, or at least initially. We did, however, get a fresh cross right in here. So right around 10 o'clock, a little bit after 10 o'clock. And guess what? My broker crashed on me this morning. I tried to get in right around here. By the time I was able to open my brokerage back up, guess what? I got the fill right in here. So anyway, this turned out to be not a good trade. Not a good trade at all. And at that point, I'm thinking, okay, you know what? It's early in the day. That's fine. You know, take your lumps, because as 920 traders, or as any traders, you're going to have wins. You're going to have losses. Having a loss first trade out of the gun, you know what? It happens. That's just the reality of the situation. It happens. I was able to close out of the trade, and I did lose some money on it. But at any rate, I took that trade, lost money. It happens. Oh, well, we move on to the next trade. I did not take this trade back to the downside because it didn't look like we were making too much of a lower low in there. And it kind of bounced around. So we had this first cross to the upside, first cross to the downside. Again, didn't do a whole lot. Didn't take any of these crosses. Not that I was necessarily gun shy. I wasn't gun shy. I mean, when we get a cross, when we get confirmation back to the upside or the downside, I like to put on a trade. But if you look at these plays in here, we were not making higher highs. We're just kind of bouncing between a pretty tight range. Now, if you're a scalper, you can absolutely positively scalp these ranges. But I am not a scalper. I like to get in my trades, sit in my trades, and then use that 9 for support on the way up and use the 9 as resistance on the way back down. So at any rate, I didn't take this cross right here, didn't take this cross. I did, however, because we made a higher low and we got a cross right in here. I took this cross back to the upside, did okay on it. You know, it wasn't great, nothing great. But again, we did have that cross to the upside. We breached back to the downside, closed it out for a small gain. We got another cross, didn't take any of these crosses. I was dealing with a lot of members for a good part of the day, so I didn't take any of these crosses. So cross here, cross back here up to the upside, and across to the downside. Again, I didn't take this cross to the downside, which would have been a really, really, really nice cross. Now, again, remember the level that we were looking at in pre-market. So that 471.74, we had to breach that back to the downside to obviously to make a lower low. Now we did earlier in the day, we got down in this range. So I decided to take this cross back to the downside at 1220. So at 1220, I took this cross to the downside. It was a nice play. It was a nice play. I actually closed it out in here because I was looking at the higher time frame, and we did not breach this level, this 471.74, 73 again to the upside. So it was a nice play. Now, we made a cross to the upside. I didn't play that either because, again, I'm still looking at this level, this 471.74, a little bit late into the play to take that play. So again, didn't take that play. Now again, VWAP, volume weighted average price. We are always looking at VWAP as either resistance on the way up or support on the way down. And you can use this as a target throughout the day. If you're going to play, from wherever the price action is up to VWAP, great. Play it up to VWAP, take a rejection off of VWAP, play it back to the downside. And I did. I took this play to the downside for all of about 3 minutes. I closed out right here. It was a really, really, really nice win, but it was a 3-minute play. The question is, why did I take the trade off the table right there? My only reasonable explanation for that is, well, because we had support down there. I did not trust my nine. I didn't trust my nine. It happens sometimes, you just, you have these rules, but I didn't trust the nine back to the, as my resistance. I thought we were going to reverse and run back up again. We didn't. I didn't trust the nine. So when we breached that level again, I got back in on the play, wrote it down to right in here, and took this play again down in here. So I kind of got a 3-for-1 out of this play. Had I held on to this play, it would have been a beautiful, beautiful, beautiful play to the downside. But again, I didn't. I closed it out. Took 3 different plays on that run down. Let me see. So we 1307 to 14 or 1349. So less than an hour. You're in 3 trades in less than an hour. I could have very easily stayed in that trade the entire time. Particularly if you look at something like the 3 minutes. So there's your 3-minute chart right around that time, folks. Look at that. We never tested the 9. Look at that. So look at the 3-minute. It just, once it started its downward push, it ran. I mean, it was an absolute beautiful, beautiful, beautiful play to the downside. But again, I took it 3 different times. Probably should have stayed in it, but I didn't. Okay, so the next play up, I didn't take the trade back to the upside. Didn't take this next play. We had really, really good, strong plays to the upside. Again, what we're doing from a conservative standpoint is we're waiting for that 9 to cross the upside. Now, our first green candle after the cross is this candle right here. That is what gets you into the trade, is that candle right there. Now, again, we had that 474 or 470.74 right in here. Now, the question is, where do we get that 470.74? I will show you on the 30-minute chart. That is a 30-minute demand zone. It's a 30-minute demand zone from a little over a week ago. So Monday the 8th, we made that low down there, pushed it back up. So you can assume that when you get to either a 30-minute demand zone down low or a supply zone up top, it's going to, pick up a bunch of buyers low or sellers high. But again, that's where that line came from. We came down there, we punched that. It was a beautiful, beautiful play back to the downside. I didn't take anything up to the upside. Could have certainly taken it to VWAP, no question about that. Again, once we breached this 470.74 to the upside, could have taken it. I didn't play it. I did, however, take this breach off of VWAP. We tested VWAP multiple times, came down, had a nice play, nice double cross to the downside. Pretty close to a double cross. 9 was right on top of the 20 at that time. So took it back down to the downside. Very, very nice play to the ups or to the downside. As far as the rest of the day, I was pretty much done for the day at that point. We had members that took plays later in the day. I could have taken those plays again. 470.74, we hit that demand zone and it shot right up. I mean, it was a beautiful, beautiful play to the upside. Now, this is the 350 candle. 350 candle it's the famous candle throughout the day. That's the market on close candle. That's where all those orders sitting there to fill at 10 minutes before the close. That is that candle right there. So you got market on close every single day at 350. This one paid, and it paid like a mother. Now, from the bottom to the top, we got 473.70 or 471.73, all the way up to 472.36. So this absolutely paid. We had several of our members that took this candle. We're still in on this play back from the downside and stayed in that trade. And it was just an absolute banger from 471.73 all the way up to the top. Could have held on to it for several minutes. But when you get a big candle like that, particularly late in the day, you want to go ahead and get out of that play. There's no way you can perfectly time the top, but you've got momentum on your side. So go ahead and mark it out of that order. At any rate, it was a good day. It was tough. It was very, very tough early in the day. And I say tough. A lot of people did very, very well early in the day, but I had that first goof again right in here. Got the frowny face on that one. Took the L, lived to fight another day. It turned out to be a really, really, really nice day. Now, one thing that I do want to show everybody, because I don't just use the 9 and 20. You folks have heard me talk about volume profile. So I'm going to open up volume profile on ES. So these are futures. So futures right here trade just almost all the time. So what volume profile is it's a visual representation of where the volume has been traded during the trading day. So these blue areas right here, that is where the most of the volume has been traded during the trading day. Now we have this yellow or this goldenrod line up here. It's called the POC. So that's the point of control. That is the point at which most money has changed hands during the trading day. So here is how we use the POC. When we get into what are called heavy volume areas, this blue shaded area, let me make that a little bit bigger. So we get into these blue shaded areas like this. These are heavy volume areas. Price tends to move slowly through the blue shaded areas. Now, once we get into these areas where we don't have as much blue shading, this is called a thin volume area. When we get into a thin volume area, price tends to move much more quickly through a thin volume area than it does a heavy volume area, obviously. And the reason is there are fewer positions being defended in the thin volume areas, so it's easier to move price with lower volume through those areas. So price tends to move from a heavy volume area into a thin volume area, back into a heavy volume area. So it goes slow, then fast, then slow. We use the POC, again, point of control. Point of control is going to move around during the day depending on where the volume is heaviest. So it'll move from high to low, back to medium. We can use that as a target throughout the day, a target at the end of the day. It acts as kind of like the VWAP. It acts as resistance when we're below it, and it acts as support when we are above it. So at any rate, that is volume profile. I need to do a live video one of these first few days so you can see volume profile in action on SPY, because it is absolutely beautiful. And I'll walk through it as we're trading to just see exactly what I'm talking about from a volume profile standpoint. But that's how we traded SPY today. It was a really, really good day. Lots of people did really, really well. A few people took those early losses and got gun shy. But that's just that's the psychology of trading, folks. That's the psychology of trading. Trust what you are seeing on the chart, folks. Trust what you are seeing on the chart. Trust your crosses. We had multiple crosses. We had crosses all day long. Had you played the conservative strategy on the 920 cross, every single cross, guess what? You did very, very well today. Now, if you jump trades, if you get aggressive on your trades, you're going to have a few more losses. But if you take a conservative play every time you get a cross, you are going to do very, very well. Again, like we were talking about yesterday, your expected value for every cross to the upside is 53 cents. Your expected value to the downside is over $1. So you've got a 2-to-1 advantage for puts relative to calls. And puts, generally speaking, move faster than calls. So again, folks, that's how we traded SPY today. Now, if you like our videos, please consider giving us a like and maybe subscribe to the channel, and send it on to your friends if you'd like. Also, if you are interested in live daily trading, so from bell to bell, every single day the market is open, we do live trading at Trading Decoded, and that link is down below in the description, so go check it out. We're going to give you that first week for free. Now, if you're interested in the 920 trading strategy, head on over to 920trading.com. So at 920trading.com, you will find the entire strategy. Everything is there, folks. You don't need to spend thousands and thousands and thousands of dollars on a secret indicator or a secret plan. The only thing that's good for is lining the pockets of the people selling that program. That's not us, folks. Everything is out there for the entire world to see. It's straightforward. There's no bells, there's no whistles, there's no man behind the curtain. It's all there. Also, go ahead and sign up for our free newsletter. We send out that free newsletter every Saturday, so it's coming your way. So again, thanks for spending a little bit of time with us this afternoon. We certainly appreciate your views. We appreciate your comments. And again, like, share, and subscribe. So I hope everybody has a great rest of the day, and we will see you in the markets.